welcome. And yeah, this is a panel all about the private blockchains that have been developed and exist and are moving trillions of dollars around the world already, and where it stands, and the degree to which they're going to be opened up. And I think the place I'd love to start with would be with you, Raj, because you have a prime example of this. You have your own blockchain, which you call MTN, and I'm going to come out and say that probably most people here haven't even heard of it, but it plugs into all manner of things. Tell us a little bit about what you are up to.
Thanks for having me. So we at Mastercard started this journey a couple of years ago where we saw a couple of things happening. Obviously, everybody knows about the public chains and the assets that are going in, the currencies that are going in. That is one aspect of it. There is also, when it comes to trade, when it's buying and selling, you need money. And obviously, stablecoin is one answer. But there is also $18 trillion worth of bank deposits as of last month, I think, in various banks, some of whom are represented here. End of the day, that is a scalable business model for the banks. It's distributed, it's available, and that need to be available for transacting as well. So what does it take to put that together? How do you solve this where you need to represent this money, that fiat money that exists? In some cases, there may be stable coins as well, but there is assets that are coming in the public chain. The first thing that we said that we needed to do is our first product, which is whenever you interact with the public chain, you need to know who the counterparty is. You need to know what they represent. Many of the companies that are here, represented here, is actually issuing assets, and they're actually regulated in their own sense. And but you need to know that as a person buying or selling. So knowing that and having a framework for identifying those counterparties is essential. So we launched a product called Crypto Credential first, which is a building block towards the MTN that you referred to. So that is the first piece. And the second, how do you represent the money itself in an interoperable way, the bank money, as well as some other forms of the money, being stable coins or even other forms of value that is represented. How do you represent in the blockchain? How you complete the transactions? Now, this is not just about the capital market assets. It's a big use case. That's why this conference exists, and that's where many of the people, but there are other forms of assets that people want to tokenize as well. We have trade finance who wants to do letter of credits and invoices and represent that in token form as well. So end of the day, this all need to be orchestrated. So what our multi-token network is really a platform. Think of it as a platform on which applications can be developed, where you can understand who the counterparties are. You can bring bank money, some of which would be represented in traditional ledgers, not even blockchain, some of which would be represented in a blockchain-based technology, upgraded, but still living within the bank. And some forms of the currency in this beginning to come, you're seeing some examples of this in markets where the bank money itself is going to the public chain. But how do you orchestrate all this? End of the day, we need to deliver a net effect of a DVP, delivery versus payment use case, across multiple applications. Some are capital market, some are not capital market. We won't be the one issuing the asset. We will not be the one representing the final custody of that asset, but we want to provide a platform on which people can build applications. So we have a couple of banks who are connected and more applications connecting. Ondo is a great example of that.
So, okay, so tell me a little bit, first of all, about this sounds great in theory. In practice, who's using it? How popular has this proved? How long has it existed even?
Yeah, so the journey has just started. You know the overall regulatory environment and how not every bank is was ready to get into this. I think that is changing. It's already changed outside US, and in the current climate, I think it will change here as well. So we publicly announced, we first did in Hong Kong with Standard Chartered, a carbon credit-based transaction. Late last year, we announced a partnership with JP Morgan. There are more conversations happening. It's early days, but end of the day, this is about platform building. Building platforms, scalable platforms takes time. and the right building blocks need to be in place. We think the first building block is really having this kind of a mechanism where you can identify the counterparty, have a set of rules by which you can identify and interact with for whatever transactions are. That's our crypto credential. And the second is really providing this platform on which applications can be built.
So yeah, I mean, as a journalist, I talk to a bunch of tech companies, and all tech companies tell me they're a platform. Everyone needs to be a platform these days. You know, spoiler alert, we're about to talk to Ryan about moving deposits around the world, and you are a bank, and you have bank deposits. It's obvious why Citibank would be doing that. Can you just talk a little bit about why Mastercard makes sense to be the entity that is creating this layer and this platform?
Yeah, it's a very good question. So today we bring thousands and thousands of banks together in our traditional business, which is card-based business. Today you can get a card issued from one of the banks and walk into 130 million plus locations anywhere in the world and use that without having to pre-coordinate how the money is going to pay. You're going to go tap somewhere, they let you walk out with goods without checking with you who issued the card and where it came from. How is that? I know everyone goes through that experience every day, but how is that possible? It is possible based on a set of rules on which people can trust and operate. So this platform business is not new to us. We know how to organize ecosystems, bring parties together in an equitable way, so that they contribute value and they get more out of it from the network because the network grows. And that happens when people can trust it, when people can conduct transactions in a trustworthy way, identify counterparties in an easy way, and build solutions. So that's what scales. And we've done that in card network. We've done that in open banking. We do this in ACH, and so we think this requires such an organization as well, and that's what we're hoping to add value on.
So Ryan, over to you. You also have your own blockchain. Tell me a little bit about moving money during Golden Week.
So we built Citi Token Services the last couple years, went live officially in September this year. And the pain point that we were trying to solve for was we service 19,000 clients that are in 90 plus countries. Typically, on a day-to-day basis, these large corporates are managing liquidity and payments in multi-different. So you keep buffers of cash in these different regions, which is really an inefficient use of cash. And the reason they do that is because bank holidays and cutoff times. So the ability to move money instantaneously, 24/7 on a 365 basis, is really what our corporates wanted. So if you needed it for M&A activity, overdraft, whatever the case is, you can use that. So that's what we built. So Raj talks about like the network. So we built Citi Token Services within Citi's four walls, right? So we can mint and burn tokens within Citi. But we've obfuscated all the complexity of a blockchain away from our clients. And that was by design. So, if you're sending money from New York to Singapore, we mint it in New York, send it to Singapore, deposit it. But the clients have cash in their accounts. Like, the feedback we got was like, one, this technology is new. It's still emerging. They don't have the resources. Two, they don't want to manage tokens yet. Large enterprises is who we're targeting.
So, that seems very similar to what you were saying about your own thing, where it's just about taking cash, using it to buy a thing, or just using it to move the cash from one place to another. And as the client, I don't want to know from blockchain. You are pulling away from the trendy buzzwords. And you're just like, let me make certain things that you want to do a bit easier. So in terms of where you're in, how many different countries are connected to this network right now?
So currently right now we're 3, but adding additional this year also.
And is there any vision of making this bigger than just the 4 walls of Citi?
We actually started, our thesis statement our clients gave us was multi-bank, multi-border, always-on liquidity and payments. So we started working with various organizations like the Regulated Liability Network, RSN, Project Agora, on what does that network look like for the future. But if you can't move a token within the four walls of your own institution, how are you going to connect to a network? So really building out that with our clients, and I truly believe success breeds success. So showing value day one, where clients where they have money where they were unable to do because of a bank holiday or Chinese New Year last week, now they can move it instantaneously.
So what's your success criterion? Like, what does, if I come back here in a year, you know, what would you hope to be able to show?
It's really based on client demand. I mean, obviously growing more and more client demand because, you know, the speed of money doesn't match the speed of the internet, right? If we think about digital commerce, the way that money actually moves in reality. And I think it's been interesting launching the early adopter program at Citi is, you know, we thought it was just for liquidity and payments. But the uses of different programmable money, like if my account drops below X in Singapore, send money directly to New York. So there's, or M&A.
Has someone done that yet?
And T+1 settlement. So you're seeing these like use cases that, you know, we started very small, but it's starting to, you know, expand. And I think the holy grail that we're all trying to get to is like DVP atomic settlement, right? Where, but if you don't have like the cash on ledger to be able to move money real time, you'll never kind of get to that RWA instantaneous settlement.
So that brings me to you, Caroline, because you have like basically this and then broadened out across a whole bunch of other asset classes too. Tell me about, I mean, everyone on this panel has a blockchain. You have a blockchain. You must have a blockchain.
We
right?
do. Plus we have a platform, believe it or not.
You have a blockchain, we have a platform. Yeah,
Yes, of course we have. But I do think, all joking aside, you know, the platform piece is very important, right? Because that breeds that network effect. We have a philosophy in BNY that this is about a fundamental change in market structure. And obviously, blockchain technologies have proved themselves as great utilities for assets like Bitcoin. We started on the crypto custody side. We are the world's largest custodian. We custody 51 trillion of assets. Clearly, that is, there's a way to go in the tokenized world and the digital asset world to get to that level. But we felt the obligation to be there to service our clients on the crypto side. So we started in October 2022 with the crypto offering for Bitcoin and Ether. Obviously, the market shifted a little bit at that moment in time, but we stayed convicted. And why did we stay convicted? Because we felt that, first off, you needed that trusted partner to actually really enable this ecosystem to thrive and to enable the market. We fundamentally believe that blockchain technologies, smart contract technology as a derivative of, are the technologies of the future to break some of the issues that exist in the market structure. And don't hear me say that we're going to incrementally optimize a 50-year-old market infrastructure. No. We believe that we're at the precipice, that's your job. We believe that we're at the precipice of real market structure change. So whether you want to relate it back to the introduction of CCPs, CSDs back in the 70s-ish, or whether you want to think about it as electronic trading, like this is the next big shift. So people shouldn't think about it as just incremental benefits of a technology. Like this is the next wave. And why is that important? And what does our digital asset platform do? We're enabling, whether it's, we started with custody, because if you can't keep the assets safe, I mean, you're starting from a very rocky foundation. So we felt like putting that foundation in place, and you can think about that as a little bit of the back-end infrastructures as well. The same way you don't want clients having to think about the infrastructure, pipes and plumbing. Same way you want them to be sure that their assets are safe. But it's enabling then the mobility of those assets and the greater utility of those assets through the value chain. So at BNY, we operate across the entire value chain, whether it's issuance, payments, custody, financing, collateral. We're the largest collateral provider. For us, it's very important that if a client has an asset, the ability to now wrap that asset, whether you call that tokenization or other, to actually get greater value out of that asset instantaneously. So the next step is atomic settlement. So free up the asset straight away, but freeing it up for what purpose? Right, it's to then create extra value, to pump it through either into collateral, to lend it, to do many, many, many things that today in the ecosystem we live in either take multiple days or are actually not possible to do. So said very simply, for us, it's like, let's make clients' money work more for them and work more for the world, and do that in a very seamless way, 24/7. So the actual platform itself enables that. Where we are at the moment in the ecosystem, there's still, particularly on the tokenization side, there's still a lot of use cases that are starting to come to market that are really proving out there is like day-to-day value. So whether it's tokenized money market funds, we've got the very big luxury to have a lot of diverse clients who are really evangelizing this space. So we are actually managing and servicing, I think it's the majority of tokenized funds at BNY across public and private blockchains, which I think is somewhat unique for banks. And again, that was a privilege that we got because we educated ourselves on public chains through crypto. So I think we understand where public chains have an advantage for certain use cases versus private chains. And also on tokenized bonds as well, we're seeing a lot of work there, whether it's through the ECB trials and different initiatives. So again, that to me is more of an efficiency play. Take a lot of the inefficiencies out of the market, make it run cheaper, but also take out that operational risk.
I mean, so it seems to me a little bit as though you are doing this incrementally. You're like, I'm gonna, tokenize a money market fund over here. I'm going to talk to the ECB over there. I might try a bond over here. I'll build out a platform here. There will be demand from various different clients, and we will grow. And yet you're saying, like, no, this is not the plan. I do not want to be like growing one step at a time. I want a revolutionary change. And I'm just kind of wondering when that revolutionary change is meant to happen.
I do think it will take a while, right? Rome wasn't built in a day. I think for a real shift in the market, it's going to take a number of years, but it's those use cases that are incremental. The foundations are there now. We've got our platform. It can do many, many things. These use cases are today value use cases. They're making either investors money or they're making the intermediates, the asset managers money. So you're seeing real money then come into the ecosystem as a result of that. So those needs of clients are being instantaneously met. And then to Raj's point, then you get the network effect that starts to build off that. And that's why we all work with each other to make sure that we can power that. So I think you'll start seeing that shift when you start seeing more and more flow, particularly coming into the tokenization side. And then you'll start to see the momentum in the market where that market structure will really play into it. For me, the last mile is cash, though. There's still a bifurcation of solutions in the market. Some of them have a real market fit, stablecoins. But there's still a need for something that is truly interoperable across all of the players that can enable that on-cash ramp. And I think that's one of the last mile hurdles. You've obviously got the liquidity hurdles that also exist in the tokenization market. We can solve for that on the collateral side, and we can solve for that in BNY by hooking up to liquidity venues. That I don't see as an issue. That's about bringing the ecosystem together. But I think the creativity that needs to happen in the market now is how do we bring on-chain cash in a real way that can operate across the ecosystem and bridge the divide between the security side and the cash side.
Raj, isn't that like what you're trying to do?
No, the problem statement is real. So there are two aspects of this interoperability that Carolyn just talked about. One is there are multiple banks participating. There is a sending bank, receiving bank. How does that cash represented on chain kind of can clear and get settled? It happens in a certain way in the traditional network. How do we make that chain on the chain without significant overhead in a standard way? So that is problem one. And second is how do you do the asset exchange? So they're doing the building blocks. We are not doing the custody. So there are different parts of the ecosystems are coming together. End of the day, we think there need to be a platform that allows what I call just really simply apps to be built. Apps, there's nothing but that is bringing end user value to a business, end user value to a consumer. They need a common fabric on which they need to operate, and that's what the ecosystem is trying to build. We have an answer, and there are other solutions out there as well.
Ryan, are you in the market for an interoperable cash transfer platform that, like, please someone give me one and I'll plug into it?
There's several out there, but absolutely, we're not trying to create a siloed Citi
See,
token.
there is one person who doesn't want to be a platform. That's great.
That we don't, the clients don't want a Citi token. They don't want X-Bank token. They want multi-bank, always on. So it doesn't make sense for, and that's why we collaborate together on these bigger issues. And like several of us up here are on different working groups together trying to figure out like how to drive this forward. And, it's not clear which one's going to win, right? I mean, there's public, private, permission, like all different flavors of it out there. But, from a global standpoint, standard standpoint, there's definitely a ton of initiatives out there around this space. I would say, I used to joke with my team, if I had $1 for every time someone called me about a different network, I could retire,
Okay, Nadine, bring us back
What
down.
she said.
Bring us back down to earth here. Where do you, like, having listened to all of this, having understood where these technologies are, can you place that in the context of this just massive existing system that you are part of at the DTCC, and to what degree do you see the kind of agreement and consolidation that's necessary for this to really take off?
I don't know if it's consolidation as much as it is harmonization and integration. But just to give you a sense, because I think you asked Caroline, what do you mean, why is this taking so long? The numbers are not impressive. If you just look at DTCC, and we're the depository for the US equity market, so you're looking at $98 trillion of equities, $4 quadrillion in settlement. If one of us messes this up, that's not a good thing, right? So we've got to be very careful and purposeful in our approach. By all means, this is as disruptive of technology that we've ever seen in our collective lifetime, but it needs to be deployed with purpose. Each one of these individuals and organizations, as well as many people in the audience, everybody's doing a lot of great work, a lot of pioneering work in this space. We view our job, because we're the depository, and there's a lot of philosophies, whether essentially CSD will survive in a DeFi world, and who knows in 50, 60 years what will happen, but in the immediate future, unfortunately, we're not going to tokenize everything in one fell swoop, right? So for a period of time, we're going to have traditional assets and tokenized assets, digital assets coexisting, and you need a party to manage that convergence, and this is where DTCC comes in. The second thing that you heard, and you've made that comment a few times, they each have a platform, they each have a blockchain. Today alone, we heard our hosts here launched on L1, we heard Uniswap launch on L2. I mean, they're coming up fast and furious every day. Earlier, Caroline and I were joking about, like, we need to hire somebody just to keep track of these new innovations coming out every day. So inadvertently, we've created a lot of silos. One of the biggest advantage the US market has is we've got one post-trade infrastructure. But with the way we're growing this thing up, because of different reasons, right? There's speed of innovation, there's been some of the regulatory constraints that were talked about in the earlier panel. So what we're trying to do at DTCC is not replicate at all what they're doing. What we're trying to do is build a solid foundation that reinvents or reimagines what traditional things we've done today, right? As a depository, you do issuance, you do custody, you do clearing, you do settlement, you do collateral, but we don't compete with anybody. What we do is we create the platform, so the foundation, where then they run their apps on it, or they integrate their systems in it. And that is one part of the journey. I think Ryan also hinted at we have two other big impediments that we've just got to figure out. One is around standards, which is huge, and you're right, like same thing. Every day there's an organization coming up going, we've gotten 5 people around, let's have coffee and talk about standards. And then the most important component is data. Until we can streamline how we talk to each other with standards around data, that is also going to be very difficult to get the platform to coalesce. I don't believe there'll be one platform to rule them all. I think you asked the question, who's going to survive? I think there'll be many, many L1s, many, many L2s. There'll be many, many platforms. I'm sure Raj's competitor is doing exactly what he's doing. But there's a role for everybody to play in this ecosystem. And what we're trying to do is just be the, like the way I think about them, like they all have Lego blocks that they're putting together, and we've just got that flat sheet where we're just building the apps and the castle on top of it. So that is the role we're trying to play. We're very lucky. We're in a trusted position with all our clients. All of them are our owners. So we're participant owned and governed. So we've got an amazing ability to sit down and collaborate with the industry, which is awesome. We've got that same trusted position with our regulators, so we can bring the industry together and work together to make sure that we're not overlapping but complementing as we push together. And this is the royal we, This is not just DTCC, but the royal we on trying to do that. I agree with Caroline. It's going to take a while. Rome wasn't truly built in a day. But I'm hoping with the speed of technology and the new things, but we've got to be careful. We can't leave like a lot of debris in our way. We've got to be very thoughtful and responsible and purposeful as we push forward. But it will happen. It is happening.
When you say the industry, I mean, it's
The financial services industry.
Well, I mean, so
There you go.
So you deal mostly with equity securities.
No, we've got a little bit of everything.
A little bit of
And-
everything,
Yeah.
but certainly mostly securities. Obviously, there's a whole, other universe of, options, futures, and so on and so forth. Then there's a whole other universe of 200 other countries in the world, which all have their own different markets. Then there's a whole other universe of crypto. And again, almost countless number of regulators not just in lots in the US, but countless internationally. At some point, where do you sort of draw the boundaries of, you can't convene everyone in one place. Where do you kind of say, I'm just going to sort of concentrate on the Fed and what they regulate, or something like that? Where do you kind of say, we are going to have this garden where people can trust each other, and if a bunch of kids want to start trading meme coins, that's fine, but that's not going to be on our platform?
I think you just said it, right? We're not going to trade meme coins on our platform. We're gonna stick to the traditional markets. Obviously, crypto is also an option. That was not available to us, and it's still not available, but it's something that is in the realm of the possibility right now. Where do we start? We start in our own backyard. So we focus on the US markets, we focus on the US regulators. Now, the beauty of this technology, Joe, is once you let a token go, it may be issued here, but it could move globally, at the speed of the network. So that's why I think that will force regulators. We've done it before, right? After the global financial crisis, the regulators did come together. They did come up with standards. And my expectation is at some point we will do the same with digital technology. But for right now, we start where we know we can make a massive impact. The US markets are still the largest markets in the world. So if we can, as they say, if you can make it in New York, you can make it anywhere, right? And we start here and then we move forward. But we all represent global companies. We've got a global footprint, and my guess is we'll be able to influence and move forward just by the sheer impact of the actions that we will take. So it's a global process, but we can't solve it globally. We've got to start where it matters, and for me, it's here.
Ryan, you've built this. Just tell me, you have this. Sounds relatively simple. I'm a corporation. I have a bank account at Citibank, and I want to be able to move money from Singapore to New York. How many different regulators needed to sign off on that before you could start selling this to clients?
Nadine had a really good point. We are a U.S. domicile country. So we worked here first with U.S. regulators to get all the approvals and sign-offs. But every country we roll it out in, we engage those regulators as well. So Singapore was our first branch, and we targeted the branches with the largest money hubs as well as time conflicts. So 5 p.m. in New York is 5 a.m. in Singapore. So typically you couldn't send money. Now you can. But we worked with the MAS after getting all the U.S. approvals to be able to do that. And so now.
How long did it take to get the U.S. approvals?
It was a prolonged period. It was, it's a journey though. We're all in this together. And I'm sure that you spent a lot of time with internally, externally stakeholders to explain this technology and break it down in very digital money, token, bank account, wallet, making it very simplistic for everyone to understand and kind of demystify it. And then also for that reason, we obfuscated all the complexity of the technology from our clients. You log on to Citi Direct or via API, you don't have to have a wallet, you don't have to host a node, all that. And I think that gave comfort to our regulators also about understanding how we've set this up and are really focused on safety and soundness.
Raj, how many regulators do you deal with a week?
So our traditional business, we operate in 150 plus countries, and so I don't think I can give a simple answer. So in this respect, it is we're taking a very phased approach. We are starting international US dollar international based transfers, and the way that we have done is, this goes back into one of the things that you're probing with all of us, is because of the lack of clarity on how banks can get involved and put money publicly on the chain. So a lot of them starting, rightfully so, for their clients and privately. But we want to get to a state where this can actually be public. That's the first thing that need to happen. So the way we've solved for it, very similar to what Ryan said, none of the users of our system need to know anything about the chain. They all interact using simple APIs. The capabilities are abstracted, it's internal, so it's easy for people to use. So we didn't have to go through that kind of a process. But if you want to really unlock this, the first thing is how banks can directly engage and how the regulators see it. There are encouraging signs in this market, for example, on that now, and I'd really love to see a more clear regulatory clarity on that. There are other load boxes as well, right? There is, we talked about once you are ready to regulatorily put money on the chain, you need to know how do you identify counterparties, and we talked about that. That is a condition that is necessary for success. And end of the day, it need to be interoperable, and Caroline made that point as well. So that is another precondition for this to scale. I think we see all of us putting building blocks in place, but when this come together, I think we can really take it to the next level. I think we are on the cusp of that. It'll take years, to Caroline's point, but it.
Yeah, there's no silver bullet. It's going to take all of us in this room and everybody else to continue to collaborate to build this new digital ecosystem. So Wall Street 2.0 isn't just going to materialize. It's going to take a lot of time.
Yeah.
How much quicker do you think it can happen now with this new regulatory regime in the United States compared to 4 months ago?
It's definitely going to accelerate. We're already feeling the momentum. A number of us are talking about, the oppression we felt last year versus this year. There's definitely more freedom to really have the conversations. I also wouldn't underestimate the amount of education. Ryan mentioned it. I think our obligation, operating across like 100 plus markets, across a diversity of regulators, is to do our job to educate, right? So that takes time. I do feel there is a decent amount of that education now that's paying forward. I think the next step, though, is to really think about this from a different lens. So if we're just regulating the thing that has a technology wrapper on it, that's still traditional with just a technology wrapper on it. What we need to be thinking about is when we move to this wallet infrastructure, how does that break the regulatory environment that we exist in today? And it will and it should. If it doesn't, it means all we've done is just kind of optimized on what we had, and we just kind of incrementally made it 20% better. It goes a bit faster. It's not as exciting as what it should be. If we get it right, it shouldn't fit the model that we have today, because a wallet should hold many, many, many things. And that will break the model we have today, where we have agencies that are split a little bit more by asset class. We should have kind of a use case driven regulatory regime that sits and manages and is focused on that wallet. And I think that's the big shift, right? The education that was done historically was very, I would say, important and narrow, focused on what does the tech do, what are the risks, how do we make sure that we bring the institutional grade controls that we have. To Nadine's point, we cannot afford to get this wrong on certain parts. For example, on the custody and the clearing side, that is table stakes. You need to make sure those fundamentals are in place. But now I think the next shift is like, how do you really look at this in a different way? And how do we influence then the right amount of creative regulatory policies that can actually look at what should be a bigger disruption and a different way of managing capital markets?
Yeah,
I think there's a cultural shift here that we also need. I mean, we all grew up in environments where you had the equity team and you had the fixed income team and you had the derivatives team, right? And that doesn't work in an environment where you've got wallets and you've got tokens that transcend them. And you've also got middle and back offices that probably have not evolved or changed in eons, right? So there's also a cultural factor here. But we also, while we're all giddy and we can feel the momentum, let's remember that regulations have not changed yet,
Yes.
right? So we still have a way to go. But I think
And these
hopefully,
things are path dependent, right? I mean, like, there's such a massive regulatory infrastructure, both in the United States and globally, that the idea that that's going to tear itself down and reconfigure itself around the
doesn't
world
have
of
to.
wallets.
It doesn't have to. It needs to evolve to start
Yeah,
to recognize.
adapt.
Right, so while we're working with disruptive technology, I think the innovation is unfortunately going to be incremental for a period of time before it catches up and takes off.
And it's happened before.
Yep.
Right, let's not forget that, right? In, like, again, go back to the 70s. Like, it happened, right? The regulators were able to come together. We created central depositories, and there was a whole infrastructure built around that, both on the reg side and then obviously the market infrastructure. So it can and should happen. The speed at which it will happen, obviously, is what none of us can predict. But again, if we're not showing up doing our part, it definitely won't happen.
Okay, I think that's actually a really great place to end it. Thank you all, Nadine, Caroline, Raj, Ryan. It's been fantastic.
you.
Thank you. Thanks for
Thank you.
hosting.